All right, let's talk about today, Monday, October 20th, 2025. What a day. It felt like Wall Street just threw a massive party. We saw a huge surge pretty much across the board. You know the kind of day I'm talking about, the one that makes every investor feel like a genius. But here's the big question we really need to dig into. Was today the real deal, the start of a powerful new climb? Or was this just a sugar rush before a big fall?
So here's what we're going to cover in our explainer. We'll start with a quick snapshot of the day's performance. Then we'll get into what was driving all the action. We'll look at 5 stocks that were in the spotlight, a few different ways you could play this market, the big bull versus bear debate, and finally, the key risks you need to be watching.
First up, let's just look at the top line numbers for the day. Just how big was this rally? As you can see, it was just a sea of green. All 3 major indices closed up more than 1%, which signals some really strong investor confidence. I mean, this wasn't a slow crawl upwards. It was a confident jump. And here's what's really interesting. This wasn't just about big tech doing all the heavy lifting. The rally had really broad participation. In fact, the small cap stocks, the smaller companies, they actually had the best day of all. That's a great sign for the market's overall health. And this, well, this really shows you the mood change. This is the VIX. A lot of people call it the fear index. And today it just absolutely plunged. Dropping below that key level of 20, it's like the market just took a huge collective sigh of relief. A lot of that short-term anxiety just washed away. So what was behind this powerful risk-on mood? What was really fueling this thing? Well, it seems to be 4 main things. On the political front, you had some hopeful talk about easing trade tensions with China, plus signals that a government shutdown might be avoided. Then you had the financial side, with bond yields falling because everyone's expecting the Fed to cut rates. And to top it all off, you had a huge boost from Apple posting just explosive iPhone sales data.
But, it wasn't all smooth sailing. There was a major Amazon Web Services outage that caused, widespread disruptions. It was a pretty stark reminder that the entire AI boom we're also excited about really depends on a few key tech players, and maybe that infrastructure is a little more fragile than we think. Okay, now let's zoom in a little bit. Let's talk about 5 individual companies that made some huge moves today.
This slide tells some pretty different stories, doesn't it? Of course, you've got Apple hitting a new all-time high, a real tech titan. Then there's Cleveland Cliffs, which jumped an incredible 21% on news about rare earth minerals. And then you have Beyond Meat, up 127%. That's a massive meme stock style rally. On a more sober note, you see regional banks like Zion's bouncing back, which is good. But overseas, the big French bank BNP Paribas got hit hard after losing a major lawsuit. With all this going on, how might an investor actually think about navigating this market? Let's walk through some options. So here are 3 pretty distinct strategies. First, the bullish case. You just follow the momentum in big tech. Tech leadership is strong, the Fed is supportive, so why not? Second, you could look at cyclical stocks like industrials. The idea here is that with small caps outperforming, a broader recovery might be coming. And third, you could hedge. You could add something like gold to your portfolio because central banks have been buying it up to diversify away from the dollar. So, this is the crucial point, right? You can look at today's rally in 2 very, very different ways. The bulls, well, they're looking at this and saying, look, tech leadership is confirmed, the rally is broad-based, policy issues are clearing up. This is a healthy advance. But the bearish view is that this is just speculative fever, that the AI infrastructure is vulnerable, and that there are still some major credit risks hiding under the surface that people are ignoring.
So, finally, let's crystallize the 2 most important risks that we think investors should be considering right now. The first major risk is what analysts call late cycle behavior. So what is that? Well, it's that phase in a market where speculation kind of takes over, and you start to see lower quality or even unprofitable companies have these huge stock gains. It's often seen as a big warning sign that a market top could be near. And this quote from an analyst at Morgan Stanley just nails it. They say the biggest concern is when you see unprofitable companies outperforming profitable ones. It's a classic sign of speculation. Sound familiar? That massive rally in Beyond Meat is a textbook example. And the second key risk, which that AWS failure really exposed, is the strain on our AI infrastructure. The whole AI story is creating so much excitement, but it all runs on physical stuff, servers, power. Today's outage really proves that this foundation might not be ready for the explosion in demand, and that could create a real bottleneck for growth. So we'll leave you with this thought. When you step back, the single most positive thing today was how broad the rally was. It wasn't just the big guys. But the most negative, it was that hint of wild speculation in stocks like Beyond Meat. And that leads to the final question. With markets celebrating like this, is the biggest risk of all just ignoring the warning signs that are hiding right there in plain sight?